Good day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. Our focus this week is on closing 2025 strong, what Nigeria's latest GDP numbers tell us. The National Bureau of Statistics has just released the fourth quarter gross domestic product GDP report, which shows that Nigeria's economy delivered a strong performance in the final quarter of 2025, with real GDP expanding by 4.07% year-on-year. This is an acceleration from the 3.76% recorded in Q4 2024 and an improvement on the 3.98% posted in Q3 2025. On a full-year basis, Nigeria recorded an average real GDP growth of 3.87% in 2025, improving from 3.38% in 2024, reflecting a modest but steady acceleration in economic activity year-on-year. The performance reflects a solid rebound in the oil sector combined with steady momentum in non-oil sectors amid continued reforms in fiscal policy, digital infrastructure, and agricultural support. GDP measures how big and how active a country's economy is. If businesses produce more, people spend more, and services expand, GDP rises. If production and spending slow down, GDP falls. Nominal GDP at basic prices stood at 122.8 trillion naira, representing a 17.6% year-on-year increase. The non-oil sector, accounting for 97.1% of real GDP, grew by 3.99% year-on-year, up from 3.8% in Q4 2024 and 3.9% in Q3 2025. The oil sector recorded a stronger 6.8% real growth, supported by average daily production of 1.58 million barrels per day from 1.54 million barrels per day in Q4 2024. However, the oil production in Q4 2025 was the weakest in 2025 as oil production was above 1.6 million barrels per day in other three quarters. The services sector maintained dominance with a 55.9% share in GDP and grew by 4.2%, while agriculture contributed 28.7% and expanded by 4.0%. Industry, including mining and quarrying, grew by 3.9% overall, with mining and quarrying itself posting a robust 8.9% real growth. These figures underscore Nigeria's ongoing economic diversification, backed by resilient non-oil drivers and improved oil output despite global energy dynamics. Top performing sectors, drivers of Q4 2025 expansion. The fourth quarter's growth was propelled by a healthy mix of oil recovery, key services, agriculture, and infrastructure-related activities, with non-oil sector continuing to anchor the economy. Several subsectors delivered impressive gains. 1. Mining and quarrying, including crude oil, expanded by 8.9% year-on-year in real terms, a significant rebound driven by higher oil output and strong performance in metal oils, 38.8%, and coal mining, 26.1%. 2. Water supply, sewerage, waste management, and remediation recorded the highest growth at 9.2% year-on-year, reflecting increased investment in utilities and environmental services. 3. Construction advanced by 5.1% year-on-year, supported by ongoing public works, housing projects, and road infrastructure. 4. Electricity, gas, steam, and air conditioning supply grew by 4.3% year-on-year, showing recovery in power generation and distribution. 5. Agriculture posted 4% real growth, up from 2.5% in Q4 2024, led by crop production, which remains the largest contributor to the sector at 64.7% of its nominal value and 20.4% of total real GDP. This is despite the continued insecurity in major food-producing areas in Nigeria. 6. Information and communication, especially telecommunications, continued as a key non-oil driver alongside real estate, trade, financial and insurance, financial institutions, transportation and storage, road transport, and manufacturing, food, beverage, and tobacco, all contributing positively to the quarter's performance. 7. Manufacturing grew modestly at 1.13% year-on-year, with food, beverage, and tobacco as the main bright spot within the sector. 8. Collectively, these high-performing areas spanning oil recovery, utilities, infrastructure, digital services, and agriculture accounted for the bulk of the quarter's expansion and highlight the economy's broadening base. Outlook: sustained momentum into 2026. If this trajectory is sustained, full-year growth could strengthen further 2026, while consumer spending may gradually improve as inflation moderates. Financial institutions and telecommunications operators are likely to remain key beneficiaries of this expansion. For investors, the focus should remain on quality companies with strong balance sheets, consistent earnings growth, reliable dividend payments, and strategic exposure to sectors positioned to benefit from the ongoing economic recovery. For long-term investors, this is another reminder to build positions gradually, focus on fundamentals, and allow time and discipline to compound wealth. For small and medium enterprises, the improving GDP outlook in 2026 represents strong opportunities in agriculture, food processing, digital services, logistics, construction support, and telecom-related businesses. Rather than competing broadly, they should position themselves within solid value chains such as processing, packaging, and distribution. Priority should be given to sectors benefiting from ongoing reforms and expanding private sector activities. Strategically, SMEs must strengthen cost control, tax planning, improve cash flow management, and embrace digital tools for efficiency. Scaling within resilient sectors will drive more sustainable growth than spreading resources too thin. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070824637. Stay blessed and have a great week. Bye.